Salam, everybody. This is Investor Sheikh back at it again with another video. And today's halal stock pick of the week is Oak Street Health, ticker symbol OSH. Stock price is currently at $64.99 with a market cap of 15.6 billion, a 52-week low of 34.98 and a high of 66.31. So Oak Street Health is a telemedicine company similar to One Medical. However, they emphasize more with the senior citizens, the aging community. So on Robinhood, they describe it as Oak Street Health engages in the ownership and operation of primary care centers. It provides healthcare services to the older adults in its communities. And this company was founded in 2012, so it's a relatively young company. So I'm on the Oak Street Health website, and as I mentioned earlier, this is a company that focuses on providing primary care to senior citizens. So some of the features of the Oak Street Health experience consists of choice of phone, video, or in-person visits. So pretty much like telemedicine. 24/7 support line for around-the-clock care. Rides to and from center appointments. That is a distinguishing factor. Help navigating Medicare benefits. Preventative care plans to meet your health goals. Connected to trusted insurance agents. So, who can become an Oak Street Health patient? Anyone with Medicare, including Medicare Part B, Medicare Advantage plans, Medicare Supplement or Medigap plans, and Medicare Medicaid plans. What hospitals do you work with? We work with any area hospitals that accept your insurance. And what insurance does Oak Street Health accept? We accept all forms of Medicare, including Original Medicare Part B, Select Medicare Advantage plans, Medicare Supplement or Medigap plans, and Medicare Medicaid plans. So essentially, if you have Medicare, which is primarily for senior citizens, age 65 or above, Oak Street Health would be the place to go to get your primary care, considering that they accept Medicare. Your health changes as you age. Our doctors and staff specialize in the healthcare needs of people on Medicare. Get a ride to and from appointments. Several locations have behavioral health specialists, podiatrists, and in-center pharmacies. Every Oak Street Health Center has a community room with activities all week long, where a place to socialize with your neighbors and friends. So this is a way to provide a welcoming environment to the members of Oak Street Health. You may think that going to a hospital or clinic might be an intimidating experience, but with the activities that they have to offer, these people are willing to engage with the aging community and make them feel welcome at a place like Oak Street Health when they're getting their health needs met. So, looking at the financials for Oak Street Health, the stock has been growing considerably well over the past year. It was in the mid 40s a year ago. then it dipped to 35, and it was hovering in the 40s and 50s range for a while until December, where we reached the 60s for the first time, and we dipped back to the 50s, and now we're back in the 60s. So again, this stock does have a $15.6 billion market cap. So the focus should not be the stock price, but the market cap. You have to ask yourself, for a company that provides primary care to the aging community, which year after year is growing than ever before, given the fact that people are living longer, people are living to their 80s, 90s, 100s. We're going to need more primary care facilities for this growing community of senior citizens. So you have to ask yourself, does this company have more room to grow? Is it worth more than $15.6 billion? That's something you need to ask yourself before investing your money in a company like this. When you look at the revenue growth, every year they've been growing, almost doubling each year. Now I said almost. So in 2017 it was almost at 200 million. 2018 is a little above 300 million, and 2019 almost doubled from 2018. However, you do see negative earnings year after year, which is expected for a lot of these growth stocks. And then you see quarterly growth in revenue, but yet we still have those negative earnings. Analysts are saying that this is a buy, well, between a buy and a strong buy, with price targets as high as 74 and as low as 52. Also on Robinhood, analysts are saying 91% are saying that it's a buy, and this is based on 11 analyst ratings. So I don't know who these analysts are, but a majority of them are saying that this is a buy. So diving deeper into the financials and the income statement, we see that the company is currently operating on a negative net income of negative $145 million. Current assets are $301 million, and liabilities are at $326 million. So in a way, yes, this does seem like a red flag, how the liabilities are greater than the assets. But this is due to the short term. As with a lot of growth companies, they're not going to be profitable in the beginning. So usually with these growth companies, you gotta give it some time for them to operate, and eventually they will come across increased revenues, increased growth, which would then lead on to profitability within the next few years. So this is very common amongst growth stocks. And lastly, here's one thing to keep in mind regarding this stock, is that they have announced a secondary offering of their stock. So Oak Street Health announced the commencement of an underwritten public offering of 9 million shares of its common stock by certain selling stockholders. Such selling stockholders also intend to grant the underwriters a 30-day option to purchase up to an additional 1.35 million shares of Oak Street's common stock. Oak Street will not receive any of the proceeds from the sale of the shares of its common stock being offered by the selling stockholders, and the selling stockholders will bear the costs associated with the sale of such shares, including underwriting discounts and commissions. So when you hear that, a company selling stock, this is a way of raising cash. And a secondary offering is pretty much a company's second attempt at as to raise cash, which the first offering was their IPO. This is Oak Street's Health's way of raising cash, which they can use to reinvest into their company to allow for future growth. This has been done by many growth stocks such as Tesla, Amazon, and of course, CleanSpark. When you are investing the excess cash that you've raised into the company, this will allow for continued growth, whether that's in the form of acquisitions, mergers, or to pay down any debts. So, all in all, this is another telemedicine company that caters to which has a niche toward the aging community. And as we've seen, we are seeing an increased amount of senior citizens due to increased lifespan and improved medical conditions. These people are living longer than ever before, so they are going to need primary care. And Oak Street Health is one of those companies providing that health care that the aging community needs. So, with that being said, look into this company if you want to invest your money into it and be a part of this growing telemedicine era that we're experiencing. Now, as always, I'm not a financial advisor, so please do not buy this stock just because I'm talking about it. Please do your own research, and if you like what you see, then go ahead and build a position into Oak Street Health. This is Investor Sheikh checking out.